Budgeting is not limited to manufacturers. It is also used by merchandisers, service companies, and not-for-profit organizations. As in manufacturing operations, the sales budget for a merchandiser is both the starting point and a key factor in the development of the master budget. The major differences between the master budget of a merchandiser and a manufacturer are a merchandiser uses a purchase budget instead of a production budget. A merchandiser does not use the manufacturing budgets, so they do not have to prepare direct materials, direct labor, or the manufacturing overhead budgets. The purchases budget shows the estimated cost of goods to be purchased to meet expected sales. The formula starts with budgeted cost of goods sold. We're going to add the desired ending inventory and subtract our beginning inventory to arrive at our required inventory. Lima Company is preparing the purchase budget for July. It estimates that budgeted sales will be $300,000 in July and $320,000 in August. Cost of goods sold is expected to be 70% of sales. That is $210,000 in July, which is simply 70% of $300,000, and $224,000 in August, and that's $320,000 times 70%. The company's desired ending inventory is 30% of the following month's cost of goods sold. If we start with our budgeted cost of goods sold of $210,000, we're going to increase that for our desired ending inventory, and we're going to decrease that by our beginning inventory. Right? The required purchases for July are $214,200. In a service company, such as a CPA firm, a law office, or a medical practice, the critical factor in budgeting is coordinating professional staff needs with anticipated services. If a firm is overstaffed, several problems may result. Labor costs will be high, resulting in lower profits because of the additional salaries. Staff turnover sometimes increases because of lack of challenging work. In contrast, if a service company is understaffed, it may lose revenue because existing and prospective client needs for services cannot be met. Also, professional staff may seek other jobs because of excess workloads. Budgeting is just as important for nonprofit organizations as for profit-oriented businesses. The budgeting process, however, is different. In most cases, nonprofit entities budget on the basis of cash flow, expenditures and receipts, rather than on revenues and expenses. The starting point in the process is usually expenditures, not receipts. For the nonprofit entity, management's task generally is to find the receipts needed to support the planned expenditures.